Every few months, the world of finance holds its breath as one of the biggest tech giants drops a bombshell, Microsoft's earnings report. But what do these reports really mean for Microsoft's stock? And why does everyone, from Wall Street to Main Street, care so much? Let's dive into the fascinating world of earnings reports and how they can make or break Microsoft's stock price. This is the story of how earnings reports influence Microsoft's stock. So, what exactly is an earnings report? It's a quarterly breakdown of how much money a company made, how much it spent, and how profitable it was. For investors, it's like a report card, and for Microsoft, it's a huge deal. Microsoft reveals important numbers, like revenue from its cloud services, sales of Windows and Office products, and profits from Xbox and LinkedIn. But here's the key: earnings reports also come with expectations. When Microsoft releases its earnings report, investors and analysts look at one thing first: did they meet, beat, or miss expectations? It's like the stock market version of a reality TV show. If Microsoft beats expectations, it's a party. If they miss, well, cue the stock drops. So, how does Microsoft's stock react to these reports? A great earnings report, where they beat expectations, can send the stock soaring. But a miss can send it tumbling in minutes. But here's the twist: sometimes, even good earnings can cause the stock to drop if investors expected even better results. Welcome to the weird world of stock market psychology. It's all about the expectations game. Let's break it down. Microsoft isn't just about Windows anymore. Earnings reports cover revenue from multiple sectors. Cloud computing through Azure is now a major driver of growth. Then there's the reliable Office suite, Windows, and their newer ventures like Xbox Gaming, LinkedIn, and AI services. So, investors are always keen to see how each of these segments is performing, especially the high-growth areas like Azure and AI. But earnings reports don't just look backward. There's another important piece: guidance. This is where Microsoft tells investors what they expect for the next quarter. And here's where things get interesting. Even if Microsoft had a stellar quarter, if they lower guidance or give a cautious outlook, the stock could still drop. It's like telling everyone you won the race, but then admitting you might trip next time around. In the long run, earnings reports are just snapshots in a much bigger picture. While they can cause short-term volatility, Microsoft's long-term performance is driven by innovation, market expansion, and smart investments. So, while each earnings report can shake things up, long-term investors look at the bigger trends to decide if Microsoft is still on the right track. But earnings reports don't just affect Microsoft's stock, they can impact the entire tech sector. A strong report from Microsoft can boost confidence in other tech stocks, while a weak one can pull the whole sector down. When Microsoft talks, the whole market listens. For investors, earnings reports are goldmines of information. They look at revenue growth, profit margins, and especially Microsoft's cloud performance through Azure. And don't forget, new projects and technologies can be the wildcards that send the stock soaring. You never know what surprise Microsoft has up its sleeve. Thanks for watching. If you're fascinated by how earnings reports can shake up Microsoft's stock, hit that like button, subscribe, and ring the bell for more deep dives into the financial world. See you next quarter.